traders and market movers. This is The Pulse with Francine Lacqua.
Now, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Some big guests coming up this hour at 9:30 a.m. We'll be joined by Catherine Ashton, former EU High Representative for Foreign Affairs and former First Vice President of the European Commission. She's also possibly rumoured to have a new role under Labour. Now, after that, we'll be speaking to the UK Chief Executive of the digital bank Revolut, and that will be a conversation on banking licence, a conversation also on crypto and the way forward. Now, on to politics, and several former rivals of Donald Trump have come full circle to endorse him for the presidency. Nikki Haley and Ron DeSantis were among those who praised Trump at the Republican National Convention in Milwaukee. So for more on all of this, let's bring in Stephanie Baker, senior writer for Bloomberg Investigation. Stephanie, as always, thank you so much for joining us. I mean, there's a million questions that I want to ask you about what happens next. But with the appointment of this new vice president, what does it mean for strategy? What does it mean for policies against China?
I think with this appointment, Trump is doubling down on his isolationist foreign policy. Vance has been very outspoken in his opposition to aid to Ukraine and sanctions against Russia. And I think in the most recent Business Week interview with Trump that we did, it was notable that Trump said he was lukewarm about defense of Taiwan and complained about how Taiwan had stolen the U.S. chip business. So I think it really paints a very kind of hunkered down isolationist policy under a second Trump term, if it happens.
So, I mean, there's also now talk about a plot from Iran. I don't know, what does this do to his base? And actually, again, with the appointment of J.D. Vance, he's not really broadening his vote.
No, it's not. And, he could have reached out to the Nikki Haley camp to try to get those, independent or swing voters. But instead he doubled down on the populist MAGA base. I think the Vance appointment is an attempt to win over those Rust Belt states, those crucial swing states that have a lot of working class voters, white working class voters that, Trump needs to win in order to win the presidency. It's not going to help him win Ohio. Trump comfortably won Ohio last time around, but I think it's very much about doubling down on the MAGA base and anointing this new generation that will ensure that the Republican Party is Trump's Republican Party.
Stephanie, I know we'll talk markets in just a second, but when you look at some of the power or some of the support that they're getting, for example, from Silicon Valley, has that surprised you? And we also have Elon Musk not only, pledging a lot of millions per month to the Republican Party, but now, getting more involved in these woke cultures and leaving California for some of these companies.
Yeah, the Musk announcement, the Musk reporting that he's going to be giving $45 million a month to a pro-Trump PAC is astounding. And I think it will bring a lot of other Silicon Valley donors to the Trump campaign, paving the way, and will really energize his campaign in a way. At the beginning, a few months ago, it looked like Trump was lagging behind Biden in terms of fundraising. Now he's pulling way ahead, and I think that will have huge implications for the presidential election going forward.
Stephanie, thanks so much. Stephanie Baker, there, a senior writer for Bloomberg Investigations. Now, for more on what's moving markets, I'm also delighted to be joined by John Taylor. He's head of European Fixed Income and Director of Global Multi-Sector at AllianceBernstein. John, are you relieved you don't have to talk politics? Although there's a Trump trade, so maybe you do have to talk a bit of politics.
Yeah, I think there is a Trump trade out there. One of the things the market's probably underpricing is the greater inflation probability under a Trump presidency. We talked about tariffs, etc. And that's been a little bit of a surprise in the most recent few weeks when the probability of Trump winning the election has not been met by an increase in break-evens on tips, even with commodity prices high. So I think that's one area that's a little bit interesting.
But, John, I mean, and you're right. I mean, there's a bit of repricing on tips. I mean, when you look at, I guess, the broader sentiment, are we looking, is the market worried about what it does to inflation? So does it change Fed expectations depending on who's in the White House? Or is it just more, there's this China bashing that could increase and lead to more tariffs?
So I think we had the view that regardless of whether it was a Democrat or Republican victory, there was always going to be a kind of negative push towards China. One's much more brazen, the other one's a bit more behind the scenes, but the outcome is essentially the same. So you're looking at greater tariffs, which itself is a little bit inflationary. So there is a chance that the market has got a little bit too excited with the Fed's ability to cut interest rates in an environment where inflation isn't yet down to the target, and you've got these kind of overhanging fears.
But the danger, I guess, there is a lot of prudence from the Fed and other central banks, and I wonder whether they worry that they have to cut and then increase if inflation comes back up. But why is the market running with that narrative?
Because the market swings from one thing to another and never happy sitting in the happy medium.
It's not employment that's making them nervous, because employment is also slowly, picking up. I think we had 4.1% at the last reading.
Yes, I think one of the key factors is the Fed's open willingness to start cutting. So I think the important point, the starting point, is that policy is very restrictive. And the longer they leave policy restrictive, the more the probability is that something bad could happen. We had a sort of pre-episode of that in the banking crisis and problems with commercial real estate. I suppose they are a little bit worried that the longer they leave rates high, something happens, and then they have to cut rates aggressively for a bad reason. They have the opportunity here with inflation meaningfully lower than where it's been, although not quite at the target, to start just taking back some of that monetary tightness in a nice way, which will be more friendly towards markets.
John, I mean, the other question is, of course, a lot of Wall Street, titans are behind Trump because of deregulation. I mean, what does deregulation mean for the markets?
So it should be, if anything, a little bit more pro-growth. So again, that should hamper the Fed's ability to cut interest rates. I think the other thing that's the sort of this side of the pond is Trump's sort of view on defence spending and the need for Europe to have to increase their defence spending, which, if anything, is going to be more negative on the growth side for Europe. So I think actually it sort of cements our view in Europe that we're going to be stuck in a fairly low growth environment. And having been in an environment where policy rates were negative for 8 years, and we've had this brief period where policy rates are 4, neither of those two things are sustainable, and actually somewhere in the middle is kind of where we think we should be. So somewhere near 2% is probably right for Europe, and the market is not really pricing that in, and the more information we get out of the US, the more confident we are that the European is going to be in a sort of slow growth and slow inflation environment, and the ECB needs to respond to that.
John, we're talking about this great rotation. I mean, it's kind of like things are changing. What do you see as worrying? I don't know whether there are any bubbles out there, or you're just going to see this swing for between bonds and equities.
So I think the big dynamic that many people are talking about, but it's probably not getting as much focus as it should, is there's an enormous amount of cash sitting on the sidelines in money market deposits, in money market funds, etc. It's grown enormously. It was $3 trillion pre-COVID. It's $6 trillion now. In every interest rate cutting cycle, the amount of money in money markets goes down, and it finds its way into other markets. So that's a very positive force for fixed income. Yeah. And we think that's probably the direction where investors are going to go, because maybe there are some stretch valuations in things like high yield, in equities. Fixed income looked pretty reasonable value in its long-term history, and definitely cheap versus where it's been for the last 10 years. So that's a very important flow dynamic that's going to be playing out not just in the next week or two, but probably over the coming quarters.
So when you look at sectors, I know you like financials. Is there anything else that you like? I know you mentioned, for example, consumer cyclicals and communications. How do you play those?
So I think the benefit on the consumer cyclical side is we're in an environment where overall growth is not going to be particularly robust, but it is going to be powered by the consumer. And the reason for that is real wages are positive. So consumers do have that spending power still. What we're very mindful of is avoiding those companies that are really going to struggle, not only in this low growth environment, but also they are coming up to having to refinance debt that they initially took out under a very different interest rate regime. And having to pay those much higher interest rate costs on that borrowing is going to be very detrimental to some of those companies. So I would say at this point, it's much less about the broader industry views, and it's much more about how much leverage does a company have, what's their free cash flow, what's their ability to service higher debt costs. And those are the types of companies that we want to be focusing on here.
Great. Thank you so much. John Taylor there from AllianceBernstein stays with us. We'll talk a little bit more about some of the chips and maybe how you play China. Coming up, Europe's biggest tech firm falling this morning as the U.S. weighs more severe restrictions on its business with China. We'll be live in Amsterdam with the latest on ASML. This is Bloomberg. Welcome back, everyone. Now, Roche shares soaring after the pharma giant said an early-stage study of its oral weight loss drug candidate found that it demonstrated meaningful weight reduction in patients with obesity. Now, shares in rival obesity drug giant Novo Nordisk fell more than 5% following Roche's announcement. Now to another corporate story, and ASML shares slumping this morning as a prospect of more severe U.S. restrictions on its business in China actually offset growth in the Dutch firm's order intake last quarter. Now for more, I'm very pleased to be joined from Amsterdam by Bloomberg's Sarah Jacob. Hi, Sarah. Good morning. I mean, this is probably the story of the day. ASML's second quarter results this morning really being overshadowed by this prospect of further trade curbs. So what do we know about this potential crackdown?
Good morning. Yes, second quarter bookings rose, but geopolitical risk has certainly been front and center this morning. My colleagues had an exclusive story that the U.S. government has told allies that it's considering using the most severe trade restrictions available if companies such as Tokyo Electron and ASML continue to give China access to advanced semiconductor technology. It's looking into a rule which lets the U.S. impose controls on foreign-made products that use even the tiniest amount of American technology. Certainly, if these restrictions go ahead, it would hit technology. It would hit the technology company ASML. And the U.S.'s goal is basically to persuade allies who've already restricted some shipments of these key equipment to China to limit their company's ability to service and repair this restricted gear.
So what did we actually learn from the results this morning, Sarah?
From the results this morning, ASML's order intake beat estimates, and that's because of it's largely being driven by this artificial intelligence boom. We know ASML is, it has a monopoly on making machines that produce the most advanced semiconductors, and that's increasingly being driven by demand for high-powered chips that are needed for artificial intelligence applications. Also, we know that results today were also, being supported by some of ASML's biggest customers, demand from there. And on looking at the China front, China accounted for nearly half of ASML's second quarter revenue, and it remains ASML's biggest market.
All right, Sarah, thanks so much. Sarah Jacob there from an update, of course, on ASML. Now, still with us, John Taylor, Head of European Fixed Income and Director of Global Multi-Sector at AllianceBernstein. So, John, we were talking about ASML. This feels like a China story, so I know it's a chip maker story, but I'm not sure how you read China or how you play into China right now.
Yes, I think the main theme here is that China growth has been sort of underwhelming expectations for a long period of time. Going back many months, we were sort of waiting for this kind of burst of activity coming out of lockdown. It never really was delivered. And the authorities in China have had to keep trying to stimulate the economy just to sort of keep the bottom from falling out. So that's not really a good news story for the rest of the world. And also for the China bond market, yields are incredibly low. They'd probably move lower than where Japanese yields. So you would never have assumed that even sort of 6 or 12 months ago. So I think China is a problem, and it's not going to come to the rescue of global growth. And so that sort of sits with our view of global growth being relatively suppressed for a few years, yeah.
John, I mean, the other story, which is basically we're seeing yen, and I don't know whether Japan is, facing some of the diminishing returns from some of the intervention to try and support yen. But what's your take on Japan right now?
I think on a long-term basis, the yen looks very, very cheap. And the reason it's got there has been massive interest rate differentials with the rest of the world. As we go through the next couple of years, those interest rate differentials are likely to close. The yen should benefit from that. And then I think just in terms of the broader JGB market, it's now looking interesting, particularly from a domestic investor base, but also from the global investor base, having had a big reset as the Bank of Japan have largely exited yield curve control. So 10-year JGBs at 1%, 30-year JGBs at 2%. Those yield levels are okay. The curve is pretty steep at 10s, 30s, so fiscal concerns that we've been talking about for a while, they're probably reflected in the steepness of the curve in Japan. It makes it quite an attractive bond market.
But, I mean, it's not easy, right? So, are you confident that actually they'll manage? Because they have quite a lot of dilemmas, especially when you give, like, what the Fed could do.
Yeah, so I think, by and large, we are likely to see the Bank of Japan inch up their own interest rates to close the interest rate gap. But as you rightly point out, it's really the Fed that have got to do the heavy lifting to close that gap. We're not assuming that they're going to meet somewhere in the middle, but the gap is going to be closed a lot. And the yen is probably, 25% cheap versus its long-term average. It's probably not going to sit there once interest rate cutting cycles get their sort of full steam.
John, does the BOE actually do something in August, or do they stand pat?
If you give me a coin, we can flip it, and that's really as much insight.
50-50?
Yeah, I think so. The employment data tomorrow is important. If it was just on headline CPI, I think the Bank of England would be going. The service side of inflation is still just too high for them to be comfortable. So it's really how much conviction they have in their forecast 1 and 2 years out. So I think it's really a coin toss. The employment data tomorrow might just swing the odds one way or the other.
Yeah, and then we have to, exactly really delve a little deeper into what this new government is doing. We'll have maybe a bit of things on like planning from the King's speech today, but are you expecting that to be inflationary?
Not necessarily. I think the sort of key takeaway is kind of the adults are back in the room, and I think that probably gives investors and citizens just a bit more confidence that there is stability. That might just give the UK economy a little bit more of a boost. And growth has sort of surprised a little bit on the upside, so therefore maybe a little bit less pressure for the Bank of England to sort of get aggressive and start cutting interest rates. We do think ultimately they will do, but just like the rest of the world, it's probably a measured pace of interest rate cuts, 25 basis points a quarter for an 18-month period. That's where we think we're going to end up.
But, John, I feel like the market, again, because in previous cycles it's been cutting and then they almost cut at every meeting. Is that what the market is readying themselves for, not necessarily this kind of cycle?
No, I think it's more of a slow and steady, because unless you're really concerned about growth, there's not too much reason for the central banks to be really aggressive in sort of shortening the pace of that cycle. So I think it's kind of a slow and steady approach.
John, thank you so much for joining us. John Taylor, they're head of European Fixed Income and Director of Global Multi-Sector at AllianceBernstein. Let's not forget the global. Coming up, HSBC continues its tradition of picking insiders to run the bank, so we'll have the full details next. And this is Bloomberg. Well, HSBC has appointed Georges Elhedery as its next chief executive, picking another insider to run the bank. Now, he replaces Noel Quinn, who announced his surprise decision to retire after a more than 3-decade career. Now, let's bring in Tom Metcalf, Bloomberg's managing editor for finance in EMEA. Tom, welcome to the program. So you have this wonderful piece, actually, on Georges Elhedery so that we try and understand him a little bit better. I mean, this is one of the most important, jobs in banking, and finally we have a name to it.
Yeah, exactly. So the continuity candidate, I think broadly speaking, this was the person people expected HSBC to pick. And, when you look at his CV and how he's been almost preparing for this role in the last few years, it does make a lot of sense. So Lebanese born, French educated. He was running the banking and markets division. He took a sabbatical. During that time, he learnt Mandarin, which is obviously an extremely useful skill if you're going to be CEO of HSBC. And broadly speaking, has shadowed Noel Quinn for a few months as well. So I think as this process continued, there was obviously Nuno Matos internally as well. But all the feedback from shareholders we're hearing so far is people sort of saw this coming, expected it, and broadly speaking, expect him to continue the strategy that Noel Quinn has implemented.
So, Tom, what's his biggest challenge? I mean, first of all, he has to get along with the chairman.
Yes,
number one. So, of course, he was probably picked by the chairman. But is it really, are there questions over the headquarters in London, or is it really trying to get that China strategy right?
Yeah, I think it's kind of implementing and focusing on growth, right? I think Noel Quinn, you look back at that sort of tenure as he really got that restructuring, that sort of pivot to Asia in place, and in many ways has done a lot of the sort of hard lifting, heavy lifting. So it'd be kind of an interesting to see where Elhedery takes it from here, but he's got a lot of experience with the investment bank markets. He has that Mandarin speaking skills, knows the Middle East very well. So I think you'll probably see focuses in all those areas. But broadly speaking, HSBC, a huge sort of oil tanker of a bank, it's probably not going to be changing direction, and shareholders really will be focused on, can you keep those returns coming? Can you keep those capital returns coming? And, eke out growth.
When are we expecting? I mean, I think that their earnings end of July. Is that the first time we'll hear from him?
Yeah, it'll be interesting to see, because he formally starts September the 2nd. Okay. So it will either be those earnings, maybe Noel Quinn's kind of farewell.
Introduction.
And he'll still be the front person. But yeah, I would expect Elhedery certainly to be speaking a lot as CFO at least, and probably, as sort of the CEO designate. So that will be our first look at him, July, August time as those Q2 results come through. And then September the 2nd is his first formal day.
Tom, thank you so much. I look forward to, of course, all of your team's coverage on this and other banking stories. Our Tom Metcalf. Now, coming up, it's a big week in UK politics as the new parliament officially opens today. Keir Starmer prepares to host his first major international meeting tomorrow. We'll get the take of Catherine Ashton, the former EU High Representative for Foreign Affairs. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Donald Trump's one-time Republican rivals back his re-election bid as a former president's security is tightened after reports of an Iranian plot to kill him. ASML falls as geopolitical risks offset an orders beat, while Bloomberg also learns that the U.S. is mulling tougher measures to restrict the company's export to China. Plus, traders walk back bets on a rate cut by the BOE next month after Britain reports stronger than expected services inflation. So pomp, pageantry, and most importantly, policy will be on full display in just a couple of hours as the first King's speech under the UK's new Labour government. Now, while being delivered by King Charles III, the text is actually written by the government and outlines its legislative priorities for the new parliament. Meanwhile, foreign affairs will also take centre stage tomorrow as Keir Starmer hosts nearly 50 leaders from across Europe and neighbouring countries at Blenheim Palace in the English countryside. Now, to discuss this big week in UK politics, I'm delighted to be joined by Catherine Ashton, who was the European Union's first High Representative for Foreign Affairs and Security Policy and the first female EU Commissioner for Trade. Now, she's also the author of And Then What? Inside Stories of 21st Century Diplomacy. So, Baroness Ashton, thank you so much for joining us. I mean, there's so much to talk to you about. You also understand intimately the Labour Party, what Labour wants to achieve. It's been 10 days, and actually we have real policies to get behind.
We do. I mean, they seem to have hit the ground running, and I know that's a phrase that gets overused, but our system doesn't give them time to pause, literally from the election result to the next morning. They have to get everything ready, and they have to start thinking about their priorities to turn ideas into policies and, of course, today into real bits of legislation. And I think they've really motored. I mean, you can see a lot of energy, a lot of effort going into the thinking beforehand. But we're seeing that translate now into real policies on the ground.
And these are a lot of economic policies. I mean, we heard the announcement last Tuesday of this National Wealth Fund, which is a concierge service, but also to attract private capital. There's a planning. Where do you think diplomacy fits into all of this?
Well, I think there's a real desire by the Prime Minister and the Foreign Secretary to make sure that Britain plays its proper role in the world, and a sense that that's not happened for some years. If you talk to the ambassadorial community here, if you talk to leaders across the world, they kind of miss us. They would like to see us come back, and I think he's quite determined to achieve that.
What role does, Prime Minister Starmer now have on the world stage? I was quite taken aback when you looked at the NATO summit to look at, President Biden, who could be gone in a couple of months. You had President Macron with a very precarious situation. And, Keir Starmer has the next 5 years to actually be on the world stage and get things done.
That's absolutely right. He's got a strong majority. He's got a clear focus of what he wants to do. So he is that sort of sense of stability in the context of what's happening in NATO. But also, of course, now looking to his European partners and strengthening that relationship, which will be really important to Britain and I think really important to Europe too.
What does that look like? Because, again, if you speak to officials in Brussels that you know intimately, they've kind of moved on from the UK and Brexit because they have other things to worry about. So how much parallel, I guess, laws could there be? Okay.
They indeed will say they've moved on. But what you also get are two things. One is a sense that they still miss Britain and its role in terms of its ability to support European Union policies and ideas and to create them. And secondly, that in many of the issues that Europe is facing, especially in the context of the war in Ukraine, in the context of what's happening in the Middle East, in the context of the broader questions of foreign policy, defence, security, there's a lot to be done with Britain. We are the natural partner. We share the same values. We have the same ideals. So I think there'll be a desire on both sides to see that strengthen over time within the context of the red lines that the Prime Minister set.
I really enjoyed your book, And Then What, which is basically the idea that, diplomacy needs to have a purpose at the end of it. It's no good signing accords or, being on the world stage if you don't deeply understand what you're trying to achieve from it. What do you think that the Prime Minister's North Star in this is?
I think in the context of what he wants to do is first of all, strengthen the relationship with Europe, because that's important economically and politically. Everybody can see that. It's not about going backwards, it's about going forwards into something new. Recognition that the transatlantic relationship remains of great significance, whoever's in the White House, so making sure that works. And then I think looking at where Britain can make a difference and make an impact, certainly support for Ukraine, he's been absolutely clear about that, but also looking across the world. And I think David Lammy in his thinking will be looking at what more we can do in different parts of the world, what we call the Global South, the work of the G20 and so on, and beginning to work out what makes a lot of sense for him and for the country in that context. And I'd also add the Western Balkans, an area I know well. It's very significant, really important to Europe overall. So there's a lot of areas where I think Britain can make a difference. And as you rightly say, it's in that long-term perspective of who are we and what is it we're trying to do.
But the vice president, or the vice presidential pick of Donald Trump, was really quite divisive in talking about the UK and how, you know, it could kind of go astray. What's the right way of dealing with a personality like Donald Trump if he gets into the White House?
I think there's quite a lot of experience of dealing with President Trump in his first term. I mean, we did have relationships. I certainly, just as me, not representing anyone, spent quite a lot of time talking to officials about different foreign policy issues, not least, as you'd expect, Iran, and also the Western Balkans and other issues. So, you know, I have a sense that it's quite possible to have those conversations, certainly officials to officials. And the relationship is much more than who is in the White House, who the vice president is. A lot of leaders, in my experience, say all kinds of things in campaign, what I call the campaign rhetoric. It's part of what they do. It's part of what's expected of them. But the longer-term relationships matter, and the way in which the different sides conduct those relationships will be the real telling point.
Yeah, but it feels quite difficult. You know, it's unclear whether Donald Trump wants, for example, his relationship with NATO to be renegotiated in terms of money, so that he's trying to make a deal, or whether, you know, he'll really leave Europe hung and dry.
It's hard to know, because until people sit down and there's actually a sense of what the policy is, we're at the moment just in the slogans that always come with any campaign. You know, you campaign in poetry, you govern in prose is a really good expression, but it does say something about it, and you always find that that's the situation. So it's often hard to understand exactly what it means. It will certainly be different if we have a President Trump in the White House for the second term. I think his second term would be different to his first term. I think his ambitions will be different. But overall, a lot will depend on how far he sees America's interests being partly about the relationships that he has outside. And, of course, Europe is critical to that.
But if there's a lot of, you know, angst against China, where does that leave the UK and Europe in terms of either squaring with the US and imposing more tariffs, or trying to figure out this three-way relationship?
It's always an issue when you're trying to work out your own significant strategy towards something as important as a relationship with China, because the relationship that Europe has with China is not the same as the relationship the United States has. Massive overlaps, but not the same. So what I would argue for this country and for Europe is work out what it is that are the key elements of that strategy, and then look across the Atlantic and see where there's great synergy, but also where there might be differences or nuances, and then work out how best to make that effective as a transatlantic relationship.
Where would you put that as you know, priorities? Is it defence? Does it have to be defence, given what we're living through?
Well, I think when George Robertson, who's doing the defence review here, is going to be looking at the issues, he, as we know, is bound to think about what does it mean for our defence strategy in the context of China. But more importantly, as far as I'm concerned, it's about the foreign policy and economic issues that we also need to think about. And it needs to be a real priority. I do concern myself sometimes that we all need to think more strategically and deeply about the relationship with China. So there is a really solid set of policies. That's already happening here, I think. There's a lot of discussion. It's already happening in Europe. It'll be interesting to see how far those come together. And then, of course, in the context of the transatlantic relationship. But it needs to understand the differences and the similarities and where we're the same.
Baroness Ashton, your name is everywhere for a possible big job as ambassador, for the new Labour government.
Well, as I always say, you can't believe everything you read in the newspapers, surprisingly. And we'll wait and see. You know, who knows?
All right, thank you so much for joining us. Cathy Ashton, they're the former EU High Representative for Foreign Affairs and Security Policy, joining us today, ahead also of Blenheim Palace tomorrow. Coming up, our other exclusive conversation with the UK Chief Executive of fintech giant Revolut. We discuss growth, funding, and the future of the banking sector with Francesca Carlesi. That's next, and this is Bloomberg. Welcome back, everyone. Now, Revolut saw its revenue almost double to £1.8 billion last year as the fintech giant added 12 million new customers across the globe. Now, the UK-based challenger bank has spent years trying to get a banking license that would actually allow it to expand its offerings in the country. Now, meanwhile, Bloomberg also understands that a secondary share sale could value the company at $40 billion, placing it among the UK's most valuable financial institutions. Well, joining us now for an exclusive conversation and her first interview since moving to Revolut is the company's UK Chief Executive, Francesca Carlesi. Francesca, thank you so much. It's really great to speak to you to try and understand exactly what your plans for Revolut UK are. Now, Tiger Global is said to be leading this $500 million investment round. What can you tell us in terms of timeline and in terms of what you're hoping to achieve with it?
So, let's say that these... It's always great for a company like us, for a company that's been in tech, right, to welcome a new investor on board. So we are on a path of global growth, and so this will be part of what we're going to do with this. There's still a lot going on there, so it's not something we probably comment on, but it's welcome news, it's great investors, and we're going to build on this for global growth, really.
So do you see this as really like a sign of confidence? And again, in terms of timeline, are you in a hurry, or is it something that could, could take a while?
Yeah, no, this is something that is happening, and there is no hurry. And in terms of timeline, it will be there isn't a set timeline in a way. This is about confidence. Since every time that new investor comes on board is a big sign, and especially when there is also impact on valuation, right? So this is a good measure, moment of truth for all of us.
I think your chair has not ruled out a possible listing. So in terms of priorities or what you think Revolut should do, what are your top three priorities in the next?
Yes. Okay. So let's put it this way. So I know there's been a lot of discussions about IPO and listing. I think for a company like us, it is a natural course of action, eventually in due course, potentially to IPO. I must say, however, right now, this is not in the top of our agenda. So what we really focus on globally in the UK is to build a great business, so continually strengthen Revolut. So if you ask me, the top three priorities really are right now, especially in the UK, which is a core market, which has been advanced, it's been where we were born, is about first deepening the relationship with our customers. So this is really important to us. Revolut was born 9 years ago as effectively a travel card to give people better FX rate. But today we offer a much broader range of products and services. And where we're aiming to go to is to become the primary trusted bank for everybody globally. So deepening relationship with customers is very key, and we call it becoming a primary bank in a way. Second, it is about the strengthening relationship with our economic environment, with regulators, with all our stakeholders. We don't want to be only a challenger and a disruptor anymore. We want to be really part of the system and be trusted by everybody. And then thirdly is about keeping customers safe. Safety and security is very, very important for us, mostly because we know there is a lot going on now in terms of fraud, especially in the UK. This has become a national emergency. I think we are best positioned in terms of tools, data and AI to lead the fight.
And I want to, Francesca, I want to ask you about fraud in a second, because I think there's new regulation and things. In terms of actual, the banking license, I mean, this is the one thing that keeps on making waves. Do you think you're any closer to getting a UK banking license?
Well, I think this has been a process. It's been a long process, but in fact, it's a process we are going through. I think we are having what I'm seeing, and remember, I'm also relatively new, so I've been there for like 7-8 months. So I think we are working very, very well with regulator. I see a very collaborative relationship, and part of this process is also building that relationship. So things are moving forward. We are working well, and we have no no concerns at this point. There's a timeline, which is what everybody always asks me. I know, I'm not giving any timeline here because we don't control the timeline, and in a way we want to do the work that's needed to get there. And the process does need to take its course, right? So I'm sorry, Francine, I won't give you any timeline, but I'll let you know as soon as we
that means you have to come back on.
Yes.
Talk to me a little bit about Revolut's relationship with crypto. I mean, this made a big part of your revenue.
Yes.
It's less prominent in some of your results. You speak about it a little bit less. Yeah. Is that on purpose?
Well, let's say that it's not such a huge proportion of our revenue, especially now. I think there was a moment probably after COVID where it took a big proportion. Yeah. So right now, I think it's kind of below 10%. Okay. However, it is an important product for us, and I know there's been a lot of debate about crypto in the past, but in reality, it's an important product because what we do, we focus on what customers want and what customers need. And right now, crypto is becoming another accepted asset, effectively. So we want to be able to offer it, and the way we see is that we should actually offer it because in reality disruption is going to happen, innovation is going to happen, crypto is going to be there, and we're better off putting it into a more safe environment, making sure customers have access to only the safe exchanges. So it is a priority. It is an important part of our product, and we believe we can do it. It makes sense to do it because if we don't offer it to customer will look for it elsewhere, and maybe it's a little bit less protected and less safe. But we do welcome crypto regulation, and we want to be compliant at all times.
Francesca, so you mentioned fraud, and I think there's a number of regulations in place that are coming on how you basically monitor the complaints for fraud. Yeah. How's Revolut preparing for those? I think they come into play at the end of the year or close to the end of the year.
Yeah, that's correct. You're very well into the details of this. So yes, there is a new regulation coming on led by the PSR, so the Payment Service Regulator, and which will introduce a more kind of structured regime for reimbursement for fraud. Mm-hmm. We are preparing for this. We're actually ready. Is penciled to go live around October. Mm-hmm. For us, and I must say for me, since I joined, surprisingly, but fraud has been probably one of the top three priorities because we should not forget. What I was surprised about is that today it accounts for like 40% of all crimes in the UK. So I think it is a national emergency. Yeah. It needs to be fought like a normal crime. And what I'm seeing a lot, this is really interesting, is that it's becoming increasingly sophisticated. So today, with Gen AI, with all the tools that are available, it's very easy to fall victim of a scam. And so we think we are kind of, Revolut is historically building all this on AI and data. So we feel we have the tool, and the ammunition to fight it more powerfully. And of course, we always want to treat customers fairly. So we're ready for the new regime, but we want to also make sure less and less people in the UK are impacted by fraud.
Francesca, just one final question. I mean, we're 10 days into the new government with Labour at the helm. Do you think they'll support the fintech industry? Are you feeling quite good and confident about growth in the UK and some of the measures that they'll put in place?
Yeah, so I think today is an important day for this with King's Speech happening, so look forward to it. For now, what I've seen in the manifesto sounds a lot of encouraging signs. The focus on strengthening capital markets, National Wealth Fund, they're all very good signs. At the end, for us, it's not for us to dictate the policies, but what is imperative and paramount at this point for UK is to support growth. Mm-hmm. And so far, yes, I've seen very strong signals, but we're watching very closely today.
Francesca, thank you so much for joining us today. That was Francesca Carlesi, the Revolut UK Chief Executive Officer. Now, coming up, investors ride the Trump trade as expectations grow for a second term. We'll bring you all of the market analysis next, and this is Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions.
Well, that was Microsoft co-founder and climate tech investor Bill Gates there on whether net zero is still achievable by 2050. You can see the full interview. I'm really excited about this one on Leaders with Lacqua Goes Green, airing 9:30 p.m. New York time tonight in the U.S. and then 6:30 p.m. London time on Thursday. Now, investors are trying to gauge U.S. election risks as they assess what another Trump presidency could bring. For the analysis, let's bring in Ven Ram from Bloomberg MLIV. Ven, so good to speak to you. I mean, this Trump trade, it feels like a little bit soon, frankly, to be talking about it, given the polls and given we're still 5 months away from that election.
Yeah, absolutely. And I think that the markets have been wrong to, I mean, they've got the right idea about the Trump trade, i.e. higher, steeper deficits and therefore steeper yield curve and also about a strong dollar. But I think that, as you said, it's a bit premature to bring the trade on. And at the moment, what more matters for the markets is what the Fed path is likely to be. And on that front, we got some solid news earlier this month, when we saw that June inflation actually turned to deflation. So far in this cycle, we have seen disinflation, but the disinflationary narrative has moved to deflation, which is a very significant step, a watershed moment for the markets. What does that mean for the Fed's policy rate? It means that its current nominal rate is adjusted for inflation is too restrictive, and the Fed is mindful of two-sided risks, which Powell has alluded to of late. And therefore, I think that the markets are more likely to focus on the short term, which is why the dollar is getting hammered as we speak, and also yields are kind of crumbling.
So interesting. Ven, we'll have to get you back on for a much longer time period. Ven Ram, I urge everyone to go and read what Ven writes on a daily basis. Now, Bloomberg Brief is up next. We have, of course, the King's Speech here in the UK. We have a couple of inflation figures. We look at Fed, and, of course, we look at China and ASML. This is Bloomberg.